I know we are at the fag end of the day, and it must have been a long, exhaustive day for all of you. But I believe this session is extremely important because we are talking of plugging the capabilities gap in emerging economies infrastructure mission. And I think to me, from perspective of India and the other emerging economies, this is extremely critical and important. We have an outstanding panel. The Minister of Railways will be joining us shortly. He had to go for a cremation, Mr. Advani's wife, and I think as soon as he gets free, he will join us. And I thought we should start the session on time rather than delaying it any further. So let me just share a few comments, and then I will introduce the speakers and bring them in one by one. From the, so let me start from the Indian perspective. I think to my mind, the Indian government has taken some very bold initiatives in the field of infrastructure, be it the roads, the ports, the airports, and of course on railways. Allocating over $6 billion for construction of road infrastructure, 10,000 kilometers. And as we speak, the target is being increased from constructing 20-kilometer roads per day to 25 kilometers per day. And I think given India's perspective, the length and breadth of this nation, this is something which is moving at a great speed. I think in addition to that, we have seen announcements on modernization of airports. There are discussions going on for probably another airport in Mumbai and in Delhi, and there are some new airports which will be announced shortly. So let me just try to sum it up in saying that there are huge opportunities in the infrastructure area which this country is putting up. And clearly, from my perspective, I think this is the country where everyone needs to make a call of putting their money and bringing investments. To complement all what is happening, I think I must also bring to the notice of all of you here the telecom sector, which is, I think, one of the most critical piece of infrastructure, has moved at a very fast pace in the country. We've already clocked 1 billion plus mobile phones, providing connectivity across the length and breadth of the country into the rural hinterland. And the government is now talking of a digital India and building smart cities. And clearly, from my perspective, if I look at a 66,000 kilometer of railway line network and the entire railway hubs of stations and all, provide a huge opportunity of putting up optical fibers, high-speed optical highways around that, getting into providing Wi-Fi into every train and on railway stations. And I think more importantly, the communications and security system which can run across the railway network is indeed a great opportunity. Clearly, if we see the demographic of India is changing very fast. Today, we look at 300 million people living in urban areas, and by 2030, we are going to look at about 500 million plus moving into the urban areas, which clearly means that we need to build more new smart cities. So these are the infrastructure opportunities which the country provides. And I'm going to just leave 4 thoughts on the table for the panelists and all of you, and we can then dwell in the end over question and answer and come back to that. I think clearly from my perspective, the first point is we need to have the right public-private partnership model. In India, we've seen build, operate, transfer, various models in highway building into ports and airports. And now we are talking of hybrid annual models, which is, I think, an improvisation on the gaps which we felt were there earlier. The second is going to be long-term financing. If we see the annual gap globally on infrastructure is to the tune of $1 trillion. And India is no exception here. And therefore, to my mind, these infrastructure projects are long-term projects. So the financing needs to be given in a very innovative way after assessing and evaluating the viability of the projects. From the Indian perspective, and I think most emerging countries, speedy approvals. Whether it is regulatory approvals or whether there are local authorities who have to give approval, is the key for the infrastructure projects to come on time. Regulatory regime is something where we need to see a level playing field. I think to my mind, any regulatory mechanism needs to be fair and transparent, simpler for everyone to understand and comply with, but more importantly, a level playing field. It cannot be something for the public sector companies or enterprises and a different rule for the private sector companies. So let me stop at that. I mean, I thought I will just set up the context. We have with us Mr. Tom Taniguchi, is the special advisor to Prime Minister Shinzo Abe, sitting on my extreme right. Next to him is Jacques Demers. He's the managing partner from Agawa Partners, a business law firm. On my left is Mr. Memdu Karakulu Chu. Right, is that?
Very well said.
Vice Chairman and President Global Relations from Turkey. And I would like to start by inviting Tom to talk about his perspective of how Japan sees the challenges and opportunities in the emerging nations. And let me also specify here that JICA is a very strong partner with India. And I think that is something which we cherish. And as we were settling down, Tarun did prompt him to announce $1 billion before he gets off the stage. And I will leave that to him. But more importantly, Tom, I mean, you've been talking about connectivity in the ASEAN region, India, and Africa. And more importantly, what will be the role of human capital in infra building in the emerging countries? Tom?
Thank you. My role, the primary role here, is basically to buy time before our beloved friend Suresh Prabhu will come to join us. And I'm a substitute, so I have to speak all from my own brains, nothing prepared. Connectivity and human capital are going to be the two important buzzwords I'm going to be touching on. But because I'm addressing basically the Indian audience, I have to say that I personally have been frustrated by the slowness with which both countries are taking time to forge a civil nuclear cooperation deal. But in my sense, the substance of the deal is already there, and they are looking at the best possible opportunity to make it public. And my hunch, based on nothing verifiable, my hunch is Prime Minister Narendra Modi is slated to visit Japan soon, this autumn. And I think that's going to be one of the ideal opportunities when Tokyo and Delhi will jointly announce the civil nuclear cooperation deal. If that's the case, then we will be talking about, among other issues, nuclear power plant constructions as part of the broader infrastructure initiative that Japan can pursue and can cooperate with the Indian business community. That said, why did I think that connectivity and human capital are two of the most important topics that I should touch on? I'm in a public policy-making sector. I'm not in a business community. I write basically speeches, foreign policy speeches, for the Japanese Prime Minister Shinzo Abe. So my idea is basically more strategic more strategy-driven, less business interests-driven. And with that being my caveat, let me say for the Japanese perspective, cooperating on the infrastructure area is to serve, of course, business interests, but has to serve equally more strategic interests. Why so? Take a look at some of those landlocked countries in Central Asian region. If you could provide those landlocked countries with better road connections, then you might be able to imagine that some kind of fresh air is going to breeze into those landlocked countries from, let's say, the Indian Ocean region. With that, they may be better informed of what's going on in the rest of the world. Their international awareness might grow, and the hope is, with that, the democratization, the tide of better governance could also follow and enter those landlocked countries. And when it comes to overland connectivity, road connections, railroads, I think it is as important as it was in the 18th and the 19th century when the Scottish widows bought into shares of Argentine's railway buildup. I came to this country 20 years ago, basically to see what was going on in the IT, information technology sector. At the time, I thought India could leapfrog from the physical infrastructure-driven economy to IT, digital-driven economy. I think I've been wrong because if you look at the amount of share that the fresh food has in your consumer price index, it is, I think, evidence that without having better road connections and logistics connections in India, you would be worse off, which actually led both governments, India and Japan, to spend a little bit of time and to finally forge an agreement between the two governments in terms of building Mumbai-Delhi infrastructure, Mumbai-Delhi industrial corridor, in which creating the high-speed bullet line is one of the most important ingredients. The connectivity means a lot of things, but seen from the Tokyo's perspective, it also, as I said, it also has to serve strategic purposes. And to give connectivity, let's say, in the southern part of the Indo-China peninsula is also important, because there you have Cambodia, Laos, two of the countries that are lagging behind the rest of the ASEAN community. And for them, connectivity is very much important to enhance their economy, and by the same token, albeit in an indirect fashion, enhance their governance structure. The same goes with African countries. This year, Tokyo is going to bring all the government officials and relevant officials over to Kenya because there we're going to have the big African Development Conference, and we would like to see Indian presence there as well. But Africa badly needs connectivity. They're talking about the ample resources sitting under the surface of the land. But no matter how ample their natural resources are, without the road connection, the railway connection, it means nothing. So connectivity for Africa means a lot as well. I have been speaking about connectivity, but who creates this connectivity is the second part of my question. Who creates the connectivity? The Japanese way is not to send hundreds and thousands of workers from Japan over to those African nations. We can't. The Japanese way, if I may call that way, is to encourage the local workforce to get engaged as much as possible in building their own infrastructure, and thereby giving a sense of ownership to the local business community. One good example, if I may cite, is the one of Delhi Metro, which I think has been largely talked about as one of the success stories in India. There have been many, many episodes and anecdotes that you could easily cite about the initial difficulties for the two countries, or more precisely for the representatives from the Japanese and the local workforce, because they couldn't work seamlessly together. But at the end of the day, those people from the Indian workforce were able to work jointly in a seamless way with the Japanese representatives. And I think that proved to be one of the best channels through which management know-how, engineering know-how, and so on and so forth were conveyed from the Japanese side to the Indian side. Another example, if I may cite also, is the one of Turkish experience. The Japanese major construction company named Taisei was the primary contractor when the Bosphorus Channel undersea subway metro was built. And the same story occurred when the Turkish labor force and the Japanese representatives had to work under a tightly controlled time frame. So the Japanese assistance in helping build infrastructures in those countries is not only about enhancing the local businesses, but also about enhancing the local workforce and the capabilities thereof. Okay, he is here. So those are the 2 points that I wanted to say. Connectivity and human capital. And as Chairman mentioned, the Japanese aid providing agency, JICA, has accumulated a huge amount of knowledge as to how best they could work with the local workforce in order for the management, technology, whatever know-how should best be transferred from the Japanese side to the recipient side. I'll stop here. Thank you.
Thank you, Tom. We have amongst us the Minister of Railways, Mr. Suresh Prabhu, and I would like to extend a very warm welcome to you. We thought to start the session since you were getting delayed rather than delay the session, because then we have to give time to the participants to let their heads and hair down before they get into a dinner session with the Deputy Prime Minister of Singapore. So let me straight come to you. We did discuss briefly on the context of infrastructure gaps in the emerging nations and emerging countries. Now, clearly, India has been focusing very heavily on the infrastructure front, and I would leave it to you to talk about railways. I did mention very briefly on what the initiatives have been undertaken on the road, port, airports, and the railways, including the 100% FDI, which you announced on the manufacturing side. So if you could share your views on how governments and international financial institutions, along with the private sector, can do more. And then let me just add here also, most of the time the governments say that we do not get the right investors. We have the projects, but we don't have the investors. On the other hand, the investor says, we really don't know the projects being offered, are the risks and rewards equally good for the investment which we want to make. So there's a mismatch, while I'll bring Jacques into that for his views. So we would like to hear from you the opportunities in India, and how do you see the private sector role playing out in the country, as well as attracting foreign investment and financial institutions, both Indian domestic and overseas, or agencies, to take the infrastructure gaps forward. You can speak from here. Okay, at your convenience.
So, good evening, friends. And I'm very glad that the GrowthNet is back in India with such a distinguished group of people. So I always wonder that GrowthNet has the ability to net the best of the minds. So you can get all these people to think about what needs to be done to revive the global economy and also to hasten the process of development globally. I have been talking about this at a number of places in the different parts of the world, about how could one single intervention which could really trigger the huge growth potential that the world economy is still trying to explore where it is. And that one is clearly infrastructure. And the reason for that is when you invest into infrastructure anywhere in the world, the nature of infrastructure is such that though the infrastructure investment, where it goes, that geography obviously will benefit the most. Suppose if infrastructure is being made in India, obviously India will be the single largest beneficiary. But that's a very limited way of looking at it. If you really look at it, infrastructure investment in India would bring about a huge pull factor which will actually help the many different sectors, different geographies to benefit from it. Just one example which I have been giving many times is that infrastructure in India would need financing. So that may come from London or from Frankfurt or from Tokyo or from Singapore or from New York. And people may think that financing is help to the country where the investment is made. Yes, it is, but also help to those who finance, because that means that the money which is waiting to be invested finds a destination. So that's one advantage. Secondly, if you want to create an asset, and infrastructure investments will be huge, such nature of investment would also call for insurance. So the insurance will come from different parts of the world. Maybe not necessarily the insurance, but definitely reinsurance. So that again will bring in the different type of a demand for it. And when Lord Stern is here, he can tell you how exactly it will happen. And so this is something. Then, as we have seen, many of the things which get assembled in a particular country for creating infrastructure are sourced from different parts of the world. And that again would create demand for many goods, not just services, from different parts of the world. So actually, the value chain, the supply chain, which will make that infrastructure investment possible in a particular geography, will have a huge potential to create demand of a very different magnitude, different nature in different parts of the world. So infrastructure is one intervention which could actually make world growth again put on a fast track. I'm very happy that my good friend Tom is here, who is also one of the key players into many of these initiatives that we are doing in India. Japan has decided to invest $25 billion into infrastructure of India in the next few years. And therefore, we thought that Japan wants to do something, so let us give them one big ticket opportunity. So $16 billion of that will come into railways alone, in one project. The balance $9 billion also mostly will come into the railways, but $16 billion will also come into one single project. And that's something which will, the high-speed railway between Mumbai and Ahmedabad. So infrastructure has this potential. Now the question that you asked me, and that's a very valid one, is how do you address these gaps that exist between this? So first gap, obviously the policy gap. If you don't have right policy, it will not work. But sometimes, and again that you highlighted, is that the governments normally feel that we make good policies, but what is the use of that policy if there are no takers for the policy? So the policy is as good as it is implemented. So therefore, actually getting a proper investor interest into policy making is very key to the success of the policy itself. And in India, I think over a long period of time, having realized that the infrastructure creation will not happen only from public investment, we are really being now addressing the issue of how to get more and more private investment into creating public infrastructure. And that's not a very easy thing to do. Nowhere in the world we are creating public infrastructure with private money of the magnitude that now world would need to do it. And therefore, the new model that has evolved is not just public investment, not only standalone private investment, but marry both and try to create a vehicle called private-public partnership. And on that, over a long period of time, we have learnt a lot, unlearned also in the process, and now I can say confidently that we have a framework to make private-public partnership possible. Very recently, we have come out with a PPP2. The PPP1 was something which happened over time. We created model concession agreements. We found out takers, some succeeded, some have created some issues. But now, recently, we had appointed a committee called, under the chairmanship of one of the very eminent economists of India, Dr. Vijay Kelkar. And now we have a new framework which can actually take care of some of these wrong issues that we need to deal with, as well as some of the positive signs that emerge from the practices so far. And now, therefore, I can say confidently that we have a framework ready. Now, the challenge of infrastructure is that we need long-term source of financing for infrastructure. Infrastructure, by definition, will not pay for itself in 5 years or 6 years or 7 years. If it is so, then it's not infrastructure. This is normal manufacturing or some normal project. And the life of infrastructure itself is probably a few decades. So how do you ensure that we have a matching financing pattern which will be living and outliving, or not necessarily outliving, the infrastructure will outlive it, but actually taking into account the life of infrastructure project itself, and therefore how do you finance it on a long-term basis. So that means we need long-term line of financing source. We cannot have a normal household savings financing infrastructure, because the banks typically act as intermediaries, source the household funds, and try to lend to a borrower at a time which normally and should be necessarily be in line with the time he has to repay the loan. So therefore, time and demand liabilities of the banks and the lending has to match each other. But if it doesn't match, then we call it asset liability mismatch. And that could land any banking institution anywhere in the world in trouble. So what we need is long-term source of financing. Now the gap that you talked about, this is one gap, that we are trying to finance infrastructure from short-term resources for long-term needs. And that's not going to happen. So therefore what we need is long-term source of financing which can be invested into long-term infrastructure needs. And to do that, the best available institution, best available vehicle is a pension fund itself. And a pension fund can actually be the right source because that matches the profile of the infrastructure as well as the profile of the pension fund itself, where the pension fund don't have to repay their liabilities in 5 years or 6 years, but they have to do it over 30, 35 years. So that really makes sense. So I think this is a great opportunity, and this is another gap, if at all you talked about, and that can be breached. We, when I was the Prime Minister shaper for G20, have been actually telling my colleagues in the G20 that why not we organize a round table around this issue as to how do you bring the investors on one side, the possibility of investing into projects on the other, and identify what are the gaps across the table, rather than doing it on a theoretical basis. And that again, something now the G20 wants to take it forward, so that would address this issue. But I can see a bilateral dialogue as well as useful, like what we did in Japan. And I will just tell you, if I don't want to embarrass my good friend Tom, that what Japan has done for India. They have given us 50 years loan for 0.1% interest, which can be first 15 years, nothing to be repaid. So only Tom can do it for us, nobody else can do. Because this is something which I was asking only the other day. I was in the midst of all the top bankers, all the top global investors only a few days ago. And I said, if anybody in this hall, which together account for maybe several trillion dollars of investment under their management, anybody can improve it, we'll give a few $1 million prize. But nobody raised a finger, obviously, because this is something nobody can do. So the Japan, what they have done, it's a bilateral one. But again, to bridge these gaps, we can actually think about a multilateral sources. And now we are getting new multilateral institutions getting created. Asia Infrastructure Bank is one such multilateral institution which is getting created. The BRICS Bank, which again will be doing the first lending soon, they wanted to also do the first lending to railways. But the railways right now, our problem is not to get money. We have right now the good amount of money available. But how do you actually therefore bring all these different stakeholders together to create a cohesive policy framework in which the policy alone on a standalone basis has no meaning unless it is implemented on the ground. Therefore, investors also come forward. And in the process of making investment, if there are any issues, how to address them, we need also one of the gap analysis is how to create a platform where these issues can get addressed. Now, as far as another point that you mentioned, having bankable projects ready. I think that's something very interesting. The railways, we have created a group, a large pool of bankable projects. So we have a pipeline where these projects can be used for investment. And therefore, such things, many of the ministries also done in India. So we could look at bringing together investors, all the other stakeholders, because investors are not the only stakeholders in financing infrastructure. They may be actually putting the money. But as I told you, the ecosystem that is required to be built along cross-border deals of infrastructure investment, that cross-border deals, we need a lot of people to be brought in. So I'm very happy that GrowthNet has been addressing the issue. I think you could be also the right forum because you have the right connection, bringing so many people together. So maybe this is a good beginning to think about addressing the issue. But I'm very excited by the fact that infrastructure is going to be the next growth engine of pulling the present level of growth of the world to a higher level. And only country which has the highest amount of infrastructure need than any other country is India. Because India still needs large infrastructure. Every year we need something like $200 to $250 billion of investment, and that will keep rising as the economy grows. So therefore, even if you take a 10% growth rate, India would need that much. But I'm sure as we go along and our total GDP rises, we'll need even higher. So this is one country which is going to be a preferred destination for investment in infrastructure. India has already become the largest destination for FDI. And in fact, this year, as the trend shows, that we'll probably be even bettering our record of the previous year. So we look forward to working very closely to find out how these gaps can be addressed, policy to reality. Thank you.
Thank you for your candid remarks, and I will come back to you once we've done the first round. Yax, let me come to you. I mean, we just heard Minister Prabhu talking about how to really take care of the mismatch in expectations. So from your perspective, as I said, the governments and the private sector expectations, there is a mismatch on either side. There could be a misunderstanding. What is needed to, connect both better and more importantly, help bridge the financing gap which we see in the infrastructure sector. So what are your views on that?
Well, thank you very much, Mr. Mittal. And, listening to the minister, I'd have to say that many of the themes, you need long-term investors, you need for infrastructure investing, many of the themes and points that he highlighted, as well as some of the points on connectivity that Tom shared with us, I agree with all of that. But I think you have to ask yourself the question. I mean, if it's Japan and India, to use an example, or Canada and India, Canada, Japan, if it's the governments trying to do things for connectivity reasons or other reasons, that's all great, that's all public policy. But whose money is it? And so what you have in the United States, for example, you have close to $10 trillion. The minister referred to pension funds. It doesn't matter who gets in the White House. It's not their money. So if you're the chief investment officer for a pension fund and you're thinking about your investment portfolio and your mission and your duty to secure payment of the pensions to your members over the longer term, infrastructure might, as an asset class or sub-asset class, have some appeal if it has certain characteristics. Steady cash flow returns brought in annually, less volatility. But ultimately, if I'm the chief investment officer in Texas, and if I can find infrastructure investments in the power sector in the US, for example, or elsewhere that generate, let's pick a number, 8% return, and the cash flow, why would I go to India? So I think that is a conversation that has to accelerate. And I agree with the minister's comment when he was referring to the banks. The banks are short-term. I know when Claude spoke to me about speaking, I said, I've had this discussion before with actually former ministers in India and elsewhere. This is the conversation that has to happen, because from the pension fund's perspective, I'll say United States, Canada, it's a long-term bet. It's a long-term partnership. Same themes that that's really what that investment is. And so when you look at it, structuring the appropriate private-public vehicle, I think you have to look at everything, including, frankly, the pricing. So let me just share this thought with you, and then perhaps, Mr. Chairman, I'll throw it back so you can get through the whole panel, and we may stimulate some questions from the audience. But the harsh reality is, if I'm the chief investment officer and I can get 8% in Texas, and I'm looking at participating in what could be a very, very successful long-term bet in India, frankly, I don't think I want to talk about 8% today. 5 years from now, I might, if in a properly structured investment model, be quite willing to take 8%. But today, I think I would look, rightly or wrongly, at that investment and say it's riskier than investing in my backyard. So I'm going to pause there and just see if this stimulates some reaction or argument or whatever from the group. Because it's not the government's money. I'm a pension fund. I could be a perfect match for the minister and his policy. But we have to have that discussion in a very transparent, open way with proper valuation for me to even have the discussion on this side of the world versus in my backyard.
I think, Yash, you've raised a very, very important and critical point. I mean, on one hand, we are saying pension funds are the instruments where we can get long-term financing. On the other hand, you feel investing in the backyard is more safer, better, comfortable for you than coming to emerging countries and a country like India. And I'm not going to really take much time here because it is a bit surprising when the entire world is coming to India and placing their bets here. Why would you not advise pension funds to critically look at that? And I'll leave it to Minister Prabhu to answer that for you, or offline he can talk to you. You waited long. Let's come to you. So you heard what our panelists talked about, and from your perspective, what are the challenges you see or the opportunities, either which way, on the international cooperation? How can it work in a better way? And more from the viewpoint of emerging countries and emerging nations. And the second part of my question is, with the emergence of new financial institutions like AIIB, what are the opportunities, and how do you think that this will play out as we move forward?
Thank you very much. Well, let me just put this, at least for my own purposes, I tried to put it in context. There seems to be one of those rare consensus cases around, or even a hype, that infrastructure investment is the way forward for the globe, and that we need to mobilize private funding more and more to achieve that. So whenever you get so much consensus, I think it's a good idea just to step back. Especially, I remember 10, 20 years ago when infrastructure investment was slightly passé, and we were talking about human skills and governance and institutions. So something has changed. It's probably for good cause that it has changed, but it's good to keep that in mind. One possible reason is that the world economy is stuck. We don't know how to move it forward, and this looks like an appealing solution. So we all come around it and say, maybe this will save us. So another reason to be sort of cautious about it. The first question because of this, the first question I want to raise is, do we really think that infrastructure investment is good for growth across the board? When I look at IMF numbers for multipliers, it is actually a conditional yes, a qualified yes. It is only when those projects are properly selected and properly executed in those countries and cases, this is probably an ex post analysis by the IMF, then you get the long-term growth impact that you desire, and also with minimum or even a positive impact on the debt to GDP ratio. So it is a conditional yes to that question. The second part is the idea of getting private funding to help with this. As you said, there are these big numbers around. There's the 1 trillion gap per annum. I've also heard $500 billion, but nevertheless, it's a big chunk. There's a huge gap, and it seems we need to get funding in. The public funds are not enough. The multilateral development banks can do a bit, but they can't close that gap. So we go back to the pension funds, the institutional investors, the insurance funds, the sovereign wealth funds, so on and so forth. Because we know that roughly they have about 100 trillion under control. So we have a gap of 0.5 to 1, and they have 100 under control. So that seems like a nice pot of money. Then the question is, how do we get the institutional investors to chip in? And hence the gap problem. In this context, they're not coming along. There seems to be a problem. We are stuck. Multilateral development banks might actually have a role to play. They might catalyze it. But to really refine and answer that question, we need to first ask, why don't the markets do it? Why, in what particular, almost clinically, in what particular ways do markets fail to provide this facility? And hence, then we can say, let's bring in the development banks to catalyze. The first thing that comes to mind, now I'm going directly to your question, in terms of cooperation and the role of these banks, obviously these large infrastructure investment projects they're public projects. They are run by the government. They are politically engaged and involved. There are taxes, there are regulations. The governments might down the road feel the pressure of the public to sort of modify the rules of the game. So there is a political risk. When a private investor gets into these, they are taking a political risk. In some sense, if you get a multilateral development bank to get in, they might arbitrage or assume some of the risk because of their particular status. And that helps to facilitate the funds flowing in. Now, we are at a stage where we are thinking, multilateral development banks can actually do that to mobilize some of these institutional funds. And we have AIIB and the BRICS Bank, so we have new players. The problem is they can solve the partially solve the domestic political problem, but they're getting into another trap, which is the international political risk. If a bank like AIIB, I don't know how it's going to turn out, but if a bank like AIIB turns out to be the economic arm of Chinese global political strategy, then we'll again get trapped in the same problem. And I don't think we'll get the response, the facilitation of private funds flowing in. I mean, if the Kazakh public feels that the Chinese funds going in are for other reasons than economic, there'll be a reaction. Then you'll get Russians getting upset. So it'll get stuck. So it's very important that these AIIB and international banks keep a distance to political ends as they help these processes. The second point is the integrated connectivity point that Tom raised. And on that, there are two dimensions to it. One is the integration across sectors. So when you actually invest in transport, but there is no power grid in that area, it doesn't really help. If you think of it in totality, then each one of them becomes more bankable. So it is important to actually have a bank, the multilateral development bank, come in and say, I'll look at this as a whole picture. Once you do that, then the private investors feel more comfortable investing in the individual projects. If you only put forward the individual project, you don't get the effect. So that is, again, one of those things. And the other connectivity issue is, of course, the cross-border one. And in that, again, it's the MDB that can say, OK, I'll fund this pipeline, and I'll talk to these 3 countries and make sure that it's all coherent and works through. I don't have much more, so I'm just coming to the end. The third one is, of course, the execution one. It is picking the right project is not an easy task. And if you go to a pension fund and say, there is this project in Turkmenistan, and you have to actually analyze it, it's very difficult. And then there is the monitoring of the process as you go along. Then there is the contractual issues that'll come up. It's almost you need an active shareholder in these projects to protect your interests. And that, in that context, again, the MDBs can have a role to play. To finish, not MDBs, I don't know if the MDBs can do much about this, but if we really want pension funds, insurance funds to get into this space, we need to make sure that these projects, the infrastructure investment projects, become a proper asset class for these institutions. And to do that, we really need to define the risk-return characteristics. We need more information. We need to homogenize them. Possibly some securitization. So there's a whole process there. And finally, there is the interface with the global prudential regulation. Basel III, EU's insurance, EU's solvency directive, they, in some sense, penalize long-term assets. So, I mean, we know that infrastructure investment is a long-term asset. In that sense, there's a gap. So they're working against it in a justified way. But I think if we'll think about this at a global level, we need to refine this long-term risk premium capital requirement issue in conjunction with the funds we try to bring in from the pension funds and the insurance funds. There is a gap there, and I think that demands an international dialogue to complete. And I won't review the whole thing, and I'll stop there. Thank you.
Thank you, Memdu. So I'm just going to put one question to the panel, and anyone can take it first, and let's just spend about 5-6 minutes on that. After that, I'll open the floor to question and answers and conclude the session by saying thanks. I will not sum it up. I'll just try to take those minutes into the Q&A. And the question for the panelists I have is, do you feel there is real catching up happening in terms of fulfilling global infrastructure needs? And if not, then why? So anyone can be the opening batsman in the cricket parlance, and then others can follow. No, I said anyone, but why you take the lead? Since everyone is looking at you.
You know, I don't think...
It's on.
Yeah. I don't think there is anything like a global infrastructure need. Because, you know, infrastructure is really local. Because where you create it, you really have to be doing it. The question is whether global ecosystem is integrated, could be integrated into that local infrastructure or not. That's the question. And I think if you look at different countries, each country would say that we need infrastructure. Like even UK has been saying that the tube needs complete revamp. And that's one of the reasons why, in fact, some few decades, about 1.5 decades ago, almost 2 decades ago, they started this concept of PPP. Even US, after 2008, President Obama said it's a good time to revamp our infrastructure. So one is creating and revamping the existing infrastructure. Other is to create a greenfield infrastructure. So if you really look at it, all over the world, there is obviously a need. Now, also the other need that is coming up is creating an infrastructure which is climate proof. That's another challenge. Third one, how to make a smart infrastructure. That's another one. So if you really look at it, infrastructure needs will be keep changing, growing, expanding, altering. So that way there is a need. But I think infrastructure by definition is something which will be totally local.
Yeah. Anyone else?
And I think,
Well, it's in, you know, thank you very much. If I may just make, stringing this together, I may be evading your question, Mr. Chairman. So, but you talked a lot about the the MDBs, and it's interesting to note, which with respect to the most recent, the AIIB, paragraph 3 of Article 13. If you've signed up to the bank, which Canada has not, the United States hasn't, nor has Japan, but if you've signed up to it, in essence, the host country, to the minister's point about local, has a veto on the bank doing anything in that country. So it's an interesting thing when you actually look at it. Getting back to I'm just highlighting that as an example that global infrastructure is local. So I agree with the minister on that. We may not agree on our pricing, but I agree with
Tom, do you have any view or shall we go to the floor?
Obviously, you can't do everything at once at the same time. You have to prioritize, and some countries must lag behind. But I think let's say, if I may say a little bit about AIIB, it's not yet clear AIIB is going to be able to function as designed. First of all, it has to fund from the international financial community where no credit rating has been provided to the AIIB, to the best of my knowledge. And given the huge asymmetry of intelligence and information pertinent to any financial business, no matter how Beijing is committed to providing a fair amount of knowledge and information to the stakeholders, regardless of the countries, I think there's going to be a limit. And I think AIIB is ultimately going to end up as a toolkit with which the Chinese government is going to pursue its not only economic interests, but also its broad strategic interests as well.
Very well. Ananta, quickly.
I think from the institutional investor's perspective, everybody is trying to increase the little percent they allocate to infrastructure investment. So we can get the funding to close the gap. The problem is the demand for funding is rapidly shifting from developed economies to developing economies, and from greenfield projects to from brownfield to greenfield projects. That shift is creating the problem and the huge gap, I think, in the global funding scheme.
Very well. So I'm going to now open the floor. Please give your name, identify yourself, crisp question or suggestion to get crisp answers so that we can cover a lot of ground and then break the session. Yes, please. Can we have the microphone, the gentleman there?
Nick Stern, London School of Economics. I should declare an interest as I was chief economist for 10 years, 3.5 of a multilateral development bank, 6.5 years at EBRD and 3.5 years at the World Bank, and I've been closely involved with the establishment of the BRICS Bank, the NDB, and the AIIB. So you know where I'm coming from, but I'm a professor at the London School of Economics. The reason that infrastructure has become so high in our list of priorities is, relative to 15 years ago, is a much deeper understanding of the demands of urbanization and energy systems than there was then. The number of people in towns will go up from 3.5 billion now to about 6.5 billion by mid-century. And that will require a great deal of infrastructure. We understand those processes much better. To credit the Asia Development Bank, they never lost sight of infrastructure. So this isn't some whim. This is deadly serious about demands for investment.
So Professor, what is the question?
I was replying to the question that was posed from the platform, and
Okay.
they asked it. Yeah.
Got it.
The second one is a question around the MDBs. I see them as playing a very important role in making the bridge between the very early stages of infrastructure projects and the ability of the institutional investors and the pension funds to come in. They can't take the early risk. The MDBs can play a part of that early
Very
risk.
well.
And that is something where I hope the panel would comment, because I think it's fundamental to the role of the MDBs. They will need to expand their capital base, but that's perfectly possible.
Got it. Thank you. Anyone else? Yes, please.
This is Vikas Tiwari. Taking on from the Batman you mentioned as a batsman in cricket, maybe if we consider the Honorable Prime Minister as the Superman, maybe we can make the Finance Minister as the Batman and the Home Minister as the Spider-Man and Shri Piyush Goyalji as the Shakti Man. And then I would also like to congratulate the Honorable Railway Minister for becoming the Gatiman of the India. Now the question is, we missed the bus in 2004 to 2006 era. Now the start to the 2014-16 has been good. Now the engine is picking up speed. What do you foresee could be the major weak links and threats on which we need to focus so that we don't get derailed this time? Thank you, sir.
What are the threats in moving forward to the infrastructure needs of India? What are the threats or the challenges? Am I right? That's the question you're asking. For the great initiative which we started, the government started 2 years. Going forward, are there any threats and challenges to the infrastructure development? And if you see any, then how are you going to tackle that?
Can you tell
Am
me
I right?
one
That's
sector where there are no threats, which is the ride is just smooth? If that was the case, why is the world struggling? Why the 2008 happened? Why 2008 has we are not recovered from the world? Why there is so much of uncertainty in the world? So all these will happen always. So this is not one, there could be many, but you have to address all those issues. So why is the world still struggling to don't know what is going to happen next? That's the biggest challenge. So therefore, the world is full of uncertainty. So is infrastructure. So are the policies. What is important is the role of the governance. So as our government has done, in the last less than 20 months, we have been able to untangle so many of the stuck projects. So even today, we are actually trying to address some of the legacy issues. So these challenges will always come, but the role of the government will be to actually address those challenges and move on. But not just government alone. That's what I was saying. We could make a best of the policy, but we also need the takers for the policy. So the role of private investment, role of enterprise, role of risk-taking is all that also must follow.
Yes, please.
Thank you. My name is Nalin Kohli. I would request the panel to comment on something which has happened in India already in the last couple of years particularly. A great success story in railways, a great success story on the highway sector, which is unfolding. Now, in terms of risk perception, I guess this changes the whole perception, because we are not talking of a totally new greenfield project. Here is success happening in various sectors in India. And how would you perceive as investors, or how would the international community like to look at projects in India in view of the proven track record that has happened now?
So what is the specific question?
The question is to the panel, because they talked about the risk in doing something in the backyard versus doing something in India.
So, Yaks, I think you should answer that because since you are raising the alarm of coming to India and investing.
Okay, well, thank you very much. I'll take a stab. I don't know if I'm on or am I on?
You're plugged in, you're wired.
So, just want to step back to the institution. There seems to be an assumption that, and we were talking about figures and we're mixing up insurance money with, or at least some references to insurance money. I think that Memdu, you were mixing it up with pension. They're quite different, even though they're both long-term in a sense. The insurance is much more short-term, and there's only so much that BIS and the regulators can do in terms of addressing those issues. The second thing I want to say is, this 8%, I was using that investing in infrastructure. We have to remember that as the investment officer for a pension fund, I'm not planning to, and there seems to be an assumption that everybody's rushing to get into infrastructure investing. And I don't think that's true. It is a developing asset class which has certain attributes that are attractive to the chief investment or to the long-term investor. But it's competing, it's illiquid. Can't take the, if we're 50-50 on the railway, the new railway project, I can't take my 50%. I can't take the railway and move it. It's a long-term partnership that I've struck. So it's quite different than other investments which are more liquid, be they in the stock market or the bonds, which is in fact where, in terms of attributes, fixed income securities would be one of the proxies that I'd be looking at in my mix, my asset mix. So I think the first thing to say is I don't personally subscribe to the view that there's lots of institutional long-term money chasing infrastructure assets that are greenfield. And I think this is something that Memdu spoke to earlier. I agree with him, absolutely. The privatizations that you see some institutional long-term investors, frankly, in many cases, overbidding on privatized assets that are up and running, they've got a track record of generating the cash flow, so on and so on. That's quite different than the policy priorities that both the minister and Tom have alluded to. Our future, the need for greenfield, the need for dealing, and in fact the professor alluded to, the scaling up of urbanization and how it's moving at a much faster pace. These are that's the world we live in. So those needs are running up against a responsible investment officer looking at his asset mix. And there is a bridge, but it's not a limitless pot. And I don't think you're going to find, in my opinion, a lot of responsible fiduciary investors filling the gap. So whether it's some role where some risk is taken by an MDB, as was alluded to, and you wanted some reaction from the panel, that could be the case. If we want to get specific to India, and the minister's been very transparent, I think, and honest, and I respect that immensely, in terms of addressing some misfires, would be my words, not his, on some of the efforts within this great country to advance and develop infrastructure. So that has to be thought through very carefully and packaged very carefully. And then I think you'll find some institutional investors, including those for whom India is not in our backyard, taking a hard look. But there's some hard work to be done. And there's only a limited amount of an asset mix that's going to find its way into those assets.
Thank you. Can we just take 5 minutes? There are 2 questions, 2 hands up. You go first. Please ask the question straight. Yes. NK, you'll sign off.
So, Mr. Prabhu, sir, the way we know, there is many countries that's called tax haven countries, and from the whole world, such a huge amount of stacked there. So why not to propose them to come out with some bank which can be utilized irrespective of the color of the money, to utilize for infrastructure of India or the rest of the world?
That's a comment. So leave it for the minister to mull over and then see what can be done. NK, last word from you. That's a comment. Please.
But Rakesh, I think that we are out of time, so I don't want
No,
to.
no, I know you'll be very crisp and just direct the question to who you want to
All
answer.
right, this question is to Suresh ji. Harnessing private capital, technology and management is the centerpiece of public-private partnership. I think that must be really complimented that you have recognized that the past profile and the past paradigms on PPP was broken and needed to be repaired. The recommendations of the Vijay Kelkar report shows the path forward to which you have mentioned. I think that's the path forward. But the centerpiece of that, Minister, is a new act, a PPP act, which embodies all the features and recommendations of the Kelkar report. Are you confident that you will put that act together soon and this would be enacted in Parliament, and hopefully knowing your parliamentary skills, you will pilot that bill?
And if I may just add to what he said, I think private sector is ready to invest as long as we can have speedy approvals and a level playing field, a very strong regulatory mechanism. So it's part of that question and you can answer.
You know, I wish my good friend Mr. N.K. Singh was still in the parliament. So we could get that act passed very quickly. So I think you should use his contacts with so many other parties so that we can pass the legislation when we introduce in the parliament sooner. So we'll be very happy to do that. So definitely we'll take it forward. But it's absolutely right that we need a legal framework, legislative framework, so that it will facilitate it to happen and also inspire confidence. As far as transparency is concerned, I'll just give one example. And that's again because you mentioned about long-term partnership of a sector like railways. So we have already done something like we gave a $7 billion of contracts on a PPP model to two top companies in the world. I mean, they were all top companies participated, finally to one. One I can name because they already got a contract. One is GE, other is Alstom. The company which lost is again one of the top companies because they were all global top companies. So these companies were not Fortune 500, Fortune 10 companies. So they said, those who lost out, that we have never seen a transparent process than this. And though lost it, so unhappy, but happy that the process was so transparent. So that's one example. The second example is what we are trying to do now. In case of all our contracts, we want to move it on completely e-tendering platform. So that's something which will also help us, coming from some of the ideas that drawn from when Dr. Montek Singh Olole was Deputy Chairman Planning Commission. So he just walked in, so I'm just reminding him. So we are actually doing that. Now on the third one, which again is a very interesting concept which I would like to share with you, is we are trying to develop 400 railway stations, not develop but redevelop. So we are using the land and airspace of those stations. So one could go on the top and can use it for the air and land rights. The process is that entire bid will be available on the website. Anybody wants to bid for it, anybody can bid. That will be available again on the website, then it will be evaluated independently by technical and financial experts. That result, net result of that again will be put on the website, and that will be again subject to challenge. So this will not be the Swiss challenge that normally my good friends from Switzerland talk about, but this is an improved Swiss challenge. So therefore, this will be a Indian challenge. So we can try to use it like that. So this is something which we're also trying to do. So as far as transparency is concerned, that goes without saying, non-negotiable. That is something, a hallmark of our activities. At the same time, making legal framework is something which is not just in the government hands, but we'll definitely look at it as a bipartisan issue. So if all the parties agree, we'll definitely like to do it. And we can even request my good friend Mr. N.K. Singh to act as the intermediary between all the parties together so that we can get this legislation passed very soon.
So N.K., you have a new role. Thank you, Minister, and then let me wish you all the very best. I am absolutely confident that India has immense opportunities, and our participants would have gotten that. And all of you would agree that we had very good discussion, and the panelists were really candid and forth. So let me thank each one of you for being with us late evening, being tired through the day, but the cocktails are waiting, and then you get on to the dinner. Thank you very much and all the very best.